Hello, hello. Hey, everybody. Happy Sunday. Good evening, all that good stuff. Hope y'all are doing well. Hey, good evening, all that good stuff. Hope y'all are doing well. All right, so I don't know what that was, but anyway, so yeah, hope y'all are doing well. All is going great for you. So look, we're gonna get into it, but first, before we get into all of that, I need y'all to do me a favor. Now I'm doing this stuff because I'm getting asked these type of questions like, shouldn't I trade, and well, how do I know that this is work for me? How do I know if I can learn this? That's why I've been doing these series over the past few weeks to help you to see if trading is indeed for you. And if it's not, that's perfectly fine, but at least you'll know, yes, it's for me. No, it's not for me. Okay, so for those who are new, my name is Leona Clark, and I have been trading for off and on for the past close to five years. December sometime will make 5 years. I don't know the exact date, y'all, that I started trading. So I just say December. And then I just go off of that, okay? So yes, so December will make 5 years of me trading off and on. And the reason I'm saying off and on, I want to make sure people are very clear. There are going to be times when you are trading where you are going to be like, oh my God, like, should I keep doing this? Because I don't know if I can keep doing this. Or, like, why am I doing this? Why am I putting myself through this? Because if you are not in a mental space to handle the ups and downs that comes with learning the skill, I haven't even gotten to the part where you're trading live, but just flat out learning the skill. If you're not mentally prepared for that, there's going to be a lot of ups and downs. Okay, so I want you to be prepared for that by, just really looking at the information and seeing if, okay, I think I can wrap my mind around this. Yes, this makes perfect sense to me. No, it doesn't. Need a little more clarification. Okay, so do me a favor, y'all. Like the video, share the video. Also, make sure you hit that notification bell so you know when I'm going live. And then, if you have not done it yet, subscribe to the channel so that way that's your way of supporting and knowing what's going on with me when it comes to trading, investing specifically, most definitely in the cryptocurrency market. And then also we talk about what I talk about, the stock market as well, because I really do invest a lot in the stock market as well as real estate. But I'm not going to get into all of that at this moment. Okay, so with that being said, I'm trying to cut this down a little bit so it's not too loud. And I'm yelling because I feel like I'm yelling sometimes. But so that's it. So make sure you like the video, share the video, hit the subscribe button if you haven't already, hit the notification bell if you have not already. So that way, if you're not a part of the Prosperity Calls community, boom, you're there. Also, y'all want to make sure that I put this out there. I know it's part of the description of this video, but I want to say it. I am not a licensed financial advisor. I'm not a licensed trader. I am a student. And what I am sharing with you on this YouTube channel are things that I personally do that have yielded me results. Now, it is totally up to you to take what I'm sharing with you, go fact check, go ask questions with someone else, whatever you feel you need to do. People in the profession, not random folks, but people in the profession, that helps you with the type of questions that you feel you need answers to, and then make an informed decision on how you want to proceed when it comes to trading, whether that's Forex, whether that's cryptocurrency, or if you're talking about, hey, I want to learn more about putting myself in a better position to profit from my investments in the stock market. That's something else I show people too by leveraging this skill of trading. All right. So now we have that out the way. As a matter of fact, I want to make sure I share this, y'all. We have Black Friday going on. So we had some people take advantage of the Black Friday sale that occurred. So now some of those people got between 50-60% off of their ticket because they took advantage of it early. Now, listen, y'all, Cyber Monday is going to be here in a few hours. So you can still take advantage and get 50% off of the next 90-day trading bootcamp that's happening January 3rd. That is our very first session. So, of course, you'll get notifications, emails, all that good stuff before then. But January 3rd is when we will kick off. So, if you want to do that, click the link that you see in the description of this video. And then that way you can get 50% off. The code is already applied, so you don't have to enter a code. You can just put your information in and it'll automatically deduct the 50%. So whichever ticket you get, it'll automatically deduct the 50% for you, and then that's what you'll pay, okay? So now we got that out the way. Let me go to TradingView, and then we'll get started. So let's do that. And if you have any questions at any time, feel free to type them in the chat, in the comments, so that way I can address them. Okay. So I don't know why it's there. Go. All right. So just a few minutes ago, I went through the whole process. I'm not going to go through all of it like slow, like I've done before, because I want to get into how we do our exit. Okay. I want to go into how we do our exit. So first and foremost, I'm going to go to, give me 1 second, y'all, because I have something here.
Sabaoth, the Lord of the harvest, is with us and upon us. Money.
My bad, y'all. Okay, there we go. Okay, so I'm sorry. All right, so let's get into it. So here we go. So we have our AUD CAD. So the reason I have AUD CAD up here, the Australian dollar paired with the Canadian dollar, is because, remember y'all, 3-part trading system. I went here first, currency strength meter. It told me what I should pair together. Stronger currencies, 4 or more bars, pair with weaker currencies. Okay, 1 or 2 bars. Remember, I don't do 3 because typically when I see 3 bars and I've actually went to the charts for that, they were either consolidating or actually just all over the place. So when they're all over the place, that's called a choppy market. I don't trade that at all. I want to save my money, okay? I want to keep my money in my account. So I stay away from those type of markets. So I had that. I went over here to FOREX Factory. I typed each one of them in, and it told me what it was doing, if it was buying or selling. And then I put a check mark next to the things that I had on my list from here, okay? I put a check mark next to those things that actually were buying or selling according to what I found on the currency strength meter. Then, y'all, I go to the investing.com and I put in my parameters. Remember, y'all, for me, because I trade candlestick patterns, I do not trade lower than the 1 hour. Okay, so the hour is my lowest, 5 hour. So you just go up each time frame that you can, which is the hour. They don't have 4 hours, so I had to select 5 hour, and then daily, and then weekly. Okay, and that told me what I should be looking for as far as a trending market. Okay, so Euro USD was a trending market. AUD CAD actually was strong buy across the board, and now that just changed. And same with AUD USD was buy and strong buy across the board, and now that has changed. So the only one that's still showing buy across the board is Euro USD. Okay. So so now we have that out the way. I went here and I marked up AUD CAD. So if y'all have been on any of the previous sessions, you will know that we marked this up last week for a buy. And these take profit points are previous take profit points from last week. Well, actually, the TP2 is exactly the same from last week. TP1 is down a little bit because this is our previous day high. And then TP3 take profit where we would exit the trade in profit. Okay. That's our previous week high. So y'all will know if you watch the previous videos, which one of them I have in the description of this video. Okay, so you can actually go back and watch those, and I walk you through how to identify what's strong, what's weak on here, how to know if it's a buy or sell, what to look for on the Forex Factory that I'm showing you, how to set this up on investing.com, and then I show you how I do my top-down analysis to get what I'm sharing with you, which is my previous week high, previous week low, previous day high, previous day low, previous month high, previous month low. How I do all of that, I show you how to do that. I'm not doing that on this session simply because I want to get straight to how we're going to exit the market, specifically first for trading, and then adding another layer onto whatever you do to tell you to exit the market in the stock market. As an investor, I'm going to bring the skill of trading to that to give you an extra, like a little edge as an investor in the stock market. That's going to help you. Okay. So here we go. All right. So now that we know this, okay, one of the things that is shared with us in the Candlestick Trading Bible, when we are looking to exit the market, what we want to do is, number one, find our candlestick pattern. So if you are not familiar with candlestick patterns, then maybe that's not how you trade, and that's fine. Not everybody trades candlestick patterns, but that's what I do, and I strictly go off of that plus other factors that form a confluence, or it's like confirmation for me to enter a trade. Okay. So I strictly stick to currency candlestick patterns. That's my thing. Okay, that's what I enjoy. All right, and that's my lane. So I see this is on Friday. I see that there was a candlestick pattern that formed, and this actually occurred now when I did my previous day low. This actually appears at the previous day low. So we have our candlestick pattern that has formed here, which is a bullish harami, and it has a confirmation candle. So again, if you're like, Leon, I don't know what bullish harami is, don't worry about it right now. Whatever strategy you use to enter a trade, continue to use that. If you're having trouble with taking profit, that's why I'm here to help you. Okay. So if your strategy works to enter you into the trade, keep it. But if it doesn't, then you may want to consider joining the boot camp so you can learn more about the candlestick patterns, how we use them, and everything else. All right. So this is telling me should be my entry. Well, if I missed all that, which I did, because I did not look at AUD CAD on Friday around this time at 10 a.m. my time, so I missed all of this. Well, what is the market telling me to do right now? So right now, there is no confirmation telling me that I should be considering buying the Australian dollar paired with the Canadian dollar. I do have a bullish candlestick here, but the only way for me to even consider trading it is if this candle that is currently red turns green, and it has to close in the next 45 minutes as a green candle. And depending on how far up this candle closes as a green candle, if it does, that's going to determine where my exit will be. Now, this is where a lot of people, including me in the beginning, where we used to get hung up, or you may still get hung up on, well, I know how to enter, but my exit, I don't know where to place my stop loss. This is why I personally really love candlestick patterns, because our stop loss is easy for us. If indeed this closed as a green candle in a buy position, meaning prices continue to go up. So if this candle closed in a buy position, then guess what I'm going to do? I am going to automatically, because I trade the candlestick patterns and I know how to trade them, I'm going to automatically put my stop loss under here. because this is where the pattern began. Okay, so we're going to change this. Bam. Okay, so red means stop. So this means for people who are a little bit fuzzy on trading or have no clue at all, this simply means if we were to enter this trade, once it turns green, it closes green. If price were to come back down and hit here, we would get kicked out the trade, which means we lost money because price was supposed to go up. That was the expectation, but it didn't, and it pushed down. Okay, this is considered, y'all, our safety net. So we want to make sure that we're not losing too much money. We only lose what we're comfortable with based on our balance of our account. Okay, whether you're trading in the demo account, which is your practice, or your live. Now, here's the exit piece, y'all. So, Leona, how do you figure out where to exit? Well, like I said, number one, I do a top-down analysis. So my top-down analysis is telling me where price has been before and has the potential to go to again. So example, this is my previous day high, my previous day low. Leona, I don't know what you mean. I'm going to go to my put to the day chart. Okay. So as you can see right here, this is the current day. This is the candle we're on right now. It is green. It is buying. Well, the previous day, which was Friday, this was Friday. This candle is here. So however high price went previously and however low price went previously, that's what I marked. So what this does, y'all, when I go down to the hour after I put my fib on the 4 hour and all that, what this does is tell me what price has the potential to return to. So just like people may look for support and resistance, so in this case for a buy, they may look for resistance, meaning price comes, but it keeps getting stuck. And it doesn't go up, it pushes back down. Okay, like it did here. Price came up, couldn't keep going, pushed down. Price came up, got close, couldn't keep going, pushed down. Okay, so this means this is resistance. So there is a stronger possibility that price may come here and it may repeat the pattern and push back down. Or it may blow straight through there because it's come here multiple times. Then it may blow straight through here and continue on to my next take profit. Okay, so I want you all to just keep that in mind right now. So all I'm doing is first is my top down analysis. That gives me my areas where price has already been before. Okay, in a previous day, in a previous week, in a previous month. High, low, boom. Okay, got it. So now that I know that, the next thing for me to do is to put myself in a position to find another take profit only if, y'all, if indeed I'm not able to, I don't have, I have too much space. Let me say that. I have too much space or a large gap between my previous day high in this case and my previous week high over here. Okay, well, cool. So now, Leona, how do you find another take profit point? Meaning price comes to this area and then it kicks me out in profit, meaning I made money, which is a thumbs up. Okay, so now what I'm going to do is, you can do this one or two ways. It's totally up to you, but you can either change it, go up here, change it from candles to a line chart, line. And now for a buy, in this case, for a buy, we want to look for peaks. This is a peak. This is a peak. This is still a peak, even though this may be a doji candle that turns into, goes into a peak. This is a peak. So what we want to do is look for peaks that hit the same area multiple times. So the more times it hit it, the stronger the possibility that price is going to return there, because whether we want to believe it or not, there are patterns that happen in the market. It's repetitious, okay? It may not happen that same day. It may not happen that same week, but at some point, it's going to come back to that area, okay? So right now, this is old, okay? Like I said, this is from last week. So we have one. I think I went to the 4 hour to find these take profit points because I couldn't find them on the hour. I did. Now that I'm thinking about it, I'm going to just go ahead and do it because I don't want to be scrolling forever and be like, oh my gosh, like, why I can't find anything. So let's see. right now, let's see if I could find, hold on, let me see something. Okay, so that's just one. So I actually can bring this down for now. Let's see. So we got one peak here. All right, let's see. Because that, remember that take profit 2 is old. And it hit that last week anyway. So let's see if we can find some more. So we want to find more peaks that touch that green line. Okay, more peaks that touch the green line. This didn't do it at all. It came close, but it didn't do it. Came close, didn't do it. So like this is a peak, but it's way up here. Okay, it's a previous day high. See that? Let's see if we can find previous day high here. See? But I'm not seeing anything. I'm not seeing anything as far as peaks hitting this green line. So what I'm gonna do is I'm gonna move this back up. I'm gonna move it back up. Cause see, I have 1, 2 back to back right here. It was previous support, so it went from pushing down and reversing back up to now pushing up and pushing back down. So it went from support to resistance. So 1, 2. That one got close. These pierced through it. So I still technically got 2, but price likes this area. Then it had support again. So that means it's 2 resistance, 2 previous support. And then this one got, this kind of broke through it, but then pushed back down and finally blew straight through it. Same thing, that was close in support. I'm trying to see if I could find. So right now, it looks like where we have it at right now is more than likely going to be take profit 2 for this. I'm trying to get over here, but it's taking forever. Okay, yeah. So this was not a good one because there was nothing at all that was touching here. So we're gonna have take profit 2 here, and keep that in this area. All right. So, and that's only if price comes back up. Okay, that's the only way we would be considering entering this trade. Okay, price will have to come back up. All right, so there we go. So now you know how to create your exit. So again, this is automatic because of my top down analysis. So I automatically say this could potentially be one of my exit points from the market, depending on if this candle turns green before the next 36 minutes, okay, and closes above this previous one. All right, if it does that, cool. Then we'll just go and identify how many points it will be between where we would enter at to where we would be looking to exit the market in profit. Okay. So if this is too short and our risk to reward ratio is too tight, meaning 1 for 1, so it's like I'm look at it from in a standpoint of like you want to invest, right? Well, if you put $20 into the market, you want to get more than $20 back, right? Because $20 back is just you breaking even. It's what you put into the market. So that's why we don't want 1-to-1 risk to reward ratio, because we're not making money, right? It's not. However, if we look for, let's say I put $20 in the market and then I get back 40, now I've doubled my money. So I got, I've made, let me rephrase this. So I've made $20 off of the 20 that I put into the market. So that's a risk to reward ratio of 2-to-1. Okay. But if I put the 20 in and then I make 60, so I've made $40 off of the 20, boom. That's making sense. So the goal is the higher the risk to reward ratio, the better you will be in the long run, because then you can take more L's in the market and still end the day, the week, the month, the year in profit. Okay. Not suggesting anybody just take random L's in the market. Okay. So if that's making sense though, let me know that makes sense. Like you're following, you're with me, you're on point. right now. I'm looking to see if y'all have any questions. Okay. All right. So seem like we good. All right, cool. So now I'm gonna do this for Euro USD. I'm gonna do the same thing. We're gonna look at Euro USD because that's what the currency strength meter showed us when I was creating my list. It said Euro USD is supposed to be a buy. FOREX Factory confirmed that, and so did investing.com. So remember, y'all, anytime I'm going into the market, this is what I want to do. I want to look and see what the market is telling me that I should look for instead of me just guessing and all over the place, right? All right. So Euro USD, remember, y'all, yellow lines are my previous day high, previous day low. So that means Friday high was here, Friday's low was here. Previous week, so from Sunday of last week to Friday of last week, this was the previous week high, okay? The low was down here. So this is how far down last week Euro USD price went. All right, so remember, do your own top-down analysis. You can either do support and resistance, or you can do what I do, which is the previous day, week, month high, previous day, week, and month low. All right. Again, this is just letting us know price has the potential to come back to this area, and then we're just paying attention to what it does, if it forms a pattern, if it doesn't, and if we should enter the market or should we stay away. So in this case, because Euro USD was showing a buy, y'all, this is too close for my comfort. I shared this last week. I think it was like GBP, I don't remember what, GBP AUD or something. And I was like, yo, this is too close. I'm not entering the trade. I wouldn't, because there's a potential for a price to come here, not close above it, and then push down and go into a sell. It has potential for that to happen. I don't want that type of energy. And so the way to help me to manage my emotions with the market is stick to my guns. Stick to what I know. And what I know is if price is coming to a previous resistance, which is what this is, it has a potential to go in the opposite direction and not continue in that buy. I don't want to take that chance. Okay, so when it comes to Euro USD, even though the FOREX Factory, currency strength meter, investing.com, all that was saying buy, if this candle does not turn green and close above this line, I will not enter this trade. Period. There's no way. And on top of that, because I know Euro USD doesn't really give that great of profit, depending on how far above here, I honestly wouldn't trade this at all, because this is another high and this is another point of potential resistance. So price could clear this and then come here and push down. Well, my risk to reward, the goal is at a bare minimum 2-to-1. I want to double my money. So if I don't double my money, I'm not entering the trade. So I'm eyeballing this right now. Even if this was to clear here, that would be too close for profit, and that risk would be too great. So this is not a good trade. If that makes sense, let me know that this is making sense to you. Okay, gotcha. All right, see, that's what I'm talking about. So what I don't want to do is be like, oh man, like run it. No, this is how you know when to exit though, y'all. You have to find a system, a strategy that's going to work for you. So like I said, I trade candlestick patterns. I don't do all this other stuff. I don't use a whole lot of indicators. I don't use a whole lot of oscillators. I used to do that stuff. It was confusing. It's hard to teach people this got to cross this, and then this got to be this color, and this got to be that. It's too much to help people, let alone help yourself. So finding something that's very simple that tells me if this turns green, then that tells me that I should be considering entering. But because I know other things may hinder me from making the type of money that I'm looking to make, then that's going to tell me, yes, I should continue to move forward, or no, pump your brakes, Leona. So like I said, y'all, even if this turns green, it would have to close above this previous day high, because this is a form of resistance. When it does, or if it does close above this previous day high, then this means this previous week high is another point of resistance. And that tells me that there is not enough money to be made for me to enter this trade, because the risk would be too high and the reward would not be high enough. Okay. So those two are what I showed y'all. And I just want to make sure that we're good on how to know when to exit the market with a within the Forex market. How do we exit the market? So do your top down. When you do your top down, if it's a gap like this one, then or it's not really a gap like this one, you will use this as your potential take profit or possible entry, whatever. And then this would be your take profit. You need to see how far it is. If there is a gap, like let's say this was the move down here and this was your potential next point, then you will find a take profit point in between down here and up here. Okay, so again, I'm gonna show you one more time what I do. It's totally up to you. You can do it, choose not to. It doesn't make a difference. I'm just showing you what I do. I'm going to change it from candles to line, okay? For a buy, I'm looking for peaks. Price comes up, pivots, push back down. Price comes up, pivot, push back down. Price come up, pivot, push back down. Price come up, pivot, push back down. These are peaks. So when you hear me say peaks, that's what I'm talking about. Price come up, pivot, push back down, okay? So I want to find as many peaks as possible for a buy. So in this case, let's just say hypothetically, this is price down here. We want to see how many times we can find peaks at the same spot, okay? So I'm going to draw a line where I was just at. I'm using this as a reference. This is not the actual take profit. I'm going to count how many times price does this. Price come up, pivot, push back down at this line, okay? And y'all, what makes this strong as well is if you have support where price came down, pivot, and push back up at the same spot. That means price likes to come here over and over again. So that gives you an indication that it may return to this area. So this is one. Price came up, pivot, push back down. This got close, so it doesn't count. This was support, so that's cool. All right, but we really want more peaks, right? But that's cool. Duly noted. Then we have another one. When it's flatline like this, y'all, this means that there was more than likely doji candles, meaning indecision in the market. Buyers were fighting for it, sellers were fighting for it at the same time, and so price closed at the same spot that it opened. So keep your eyes right here, all right? Because now you're going to see doji candles when I change back to candles. There we go. So price got close to, where it opened. Same thing here. It formed the shooting star. So there you go. There is our answer. So now what we're going to do is look for, my dog just has to get up here. He doesn't care about me being live on YouTube or nothing. So yeah, so we have one peak, two, and then a support. So that means 3 touches right now on the same spot. So let's see if we can find one more right here prior to where price was at. Let's see how far I got to go back. How far do I have to go back? I'm on the hour too. So if you find this happening, then you can always go to 4 hour and see if you can find price and whatnot. Let's see. Okay, so I'm back in September. Dude, seriously? So disrespectful. So disrespectful. Okay. All right, here we go. There we go. See, again, price came up, pivot, push down, came up, doji candle or shooting star or something. Let's see, candles. Bam. So, yep, doji candle. So, price pretty much just hovered right here. So, this tells me we got a lot of action. All right, cool. So, that means in this case, we will be looking at this as a take profit too. All right, that we'll be looking at this as a take profit. Well, what price ended up doing, of course, as you can see, it did come up, touched it, came up again, didn't quite close above it, and then finally cleared it. Okay, and if you look over here, this buy candle got close to it. It got close to it. It didn't touch it. Okay. So this is telling us how we can find our potential exits. Y'all, you can use support and resistance if you want to find your exit points. You can do what I'm doing, which is a top-down analysis to find your exit point. But whatever strategy you're currently using, if you're not able to find your exit points, then I would say test this out and see if this makes sense to you and it's easy for you to do. Okay. So now we got the Forex part out the way. So now I'm going to go to the stock market. I'm going to go to something that most people know about, which is Apple. Okay. So go to Apple. Y'all, again, when it comes to investing, especially within the stock market, I start at the 3-month time frame because I want to see how the market has been moving prior to, me getting on here today. All right, so I already did that with Apple because I don't have to change that. I'm just going to show y'all. I already had it marked up. I'm going to leave it marked up, so I'm not going to mark it again. But I don't know why. It's like every time I do this, it just comes off like a little bit off. Okay, so this is the current 3 months, October, November, December. So this was your July, August, September. Okay, so this is how high Apple went, and this is how low Apple went during those 3 months. So that's what I marked, high, low for the previous 3 months. Same thing for the month. I'm marking previous month, high, low. Remember, my orange lines are my month. So previous month of October it went up this far and then it went down this far. Cool. Y'all, I'm doing the same thing that I do with trading. The only difference is I'm going to use the fib and the candlestick patterns to help me with knowing when to buy and to help me to know when to sell. I still do all the other steps that an investor should do when considering entering into a market, entering into an investment, especially within the stock market. There's other things that you should be doing. I'm not going over all of that. Okay, this is strictly for trading, to teach you how to exit. So what I'm going to show you is an exit potential for Apple. All right, so on the week, I personally look at investment opportunities every single week. So I'm seeing what has the market done over the past week. Should I be considering buying something on Monday or before Friday? Should I be considering buying something before the week ends? Okay, cool. So this is what you'll do. So in this case with Apple, if you had not bought prior to this movement, like prior to June, July, August, whatever, well, cool, you would have missed out on the drawdown, right? So this, again, I study candlestick patterns. So because I know that I have my 3-month low here, guess what? This is a 3-month low. It formed a candlestick pattern on the 3-month low. So that tells me this is my opportunity to consider buying. Now, do I just flat out buy? No, because you need to do your other steps that you do prior to entering any investment. Whatever your steps are, you still do that. But the trading aspect where we use the candlestick patterns, the fib, this helps us to pinpoint better price entry prices, and also when we should consider exiting because it's at an all-time high or it's at a point of resistance and it's pushing down and it's formed a bearish candlestick pattern. These are all our cues to take profit at the time as an investor and then potentially buy at a lower price at a later date. All right, so this was an all-time high over here back in July. So we have our bullish candlestick pattern that has formed here. We had a confirmation happen. So that tells me that when this candle closed for the week, then or you could have bought on Friday before the market closed, and then you would have been in profit. So let's say you bought when the candle closed on Friday, you would have been in profit at least 3.5%. since Friday. Now I have a question for you. I want you to think about this. What does your regular bank give you for keeping money in a savings account every single year? What is that percentage? Now, am I saying go buy Apple right now? Absolutely not. I'm not saying that. And I would not tell anybody what to go buy, especially in investing. However, what I'm saying is I want you to just look at the data. Look at the data. The data is going to tell you everything you need to know. And you are the person that's going to decipher all of that and say, do I want to take, that 3%, 3.5% and be like, all right, yep, I'm in there. Or do I want to wait? Totally up to you. So, okay, so that's entry. All right, cool. So now what I'm looking at is, well, how far does price have the potential to go based off of previous movement. This is not the end all be all, y'all, because there may be things that happen in the economy that could potentially cause Apple to blow past this previous high of 198. There are things that could happen. However, all I would say is this is your point to pay attention. Okay, so when we're talking about exiting and taking some profit, meaning selling a few shares, if that's what you want to do, this is your area to pay attention to see if you should start selling a few shares. So let's just say you entered at the end of that week on the 6th. So whatever that week was, all right, whatever that Friday was, you bought it on that Friday before the market closed. So now you're up 3.5%. Well, this shows you how far you have, how much you potentially have to gain when it comes back up here. So that's 6%. Again, I want you to think, what is your bank giving you? Think about that. What is your bank giving you for you leaving your money in those accounts, in a savings account? Okay. Even a high yield savings account. How much is your high yield savings account giving you? If you would have entered this, purchased some shares, you have the potential to be up almost 6.5%. To me, that's good because that's better than what your high yield savings account is giving. Okay. So when the price does get here, now this is like a big horn or a big red flashing lights telling you, pay attention, pay attention, pay attention. Okay. This is how you know when to exit. But the only way to know when to exit, y'all, is I'm telling you, doing a top-down analysis with your investments that you can actually get on TradingView and mark up is going to help you with making more money and also saving money. So you're not blowing through and you're entering and exiting and entering and exiting. And you don't need to do all that when you know how to trade. Will you make some mistakes? Absolutely, because we're human beings. But at the end of the day, you minimize it when you leverage the skill that you have. So because I did my top-down analysis, I know that 198.22, so $198, that's my, pay attention, Leona. Y'all, even on TradingView, you can set alerts. So if I want to set an alert on here to tell me, hey, look, price is at $198, now I can go pay attention to see what's going on. Okay, so this is just something to think about, y'all, straight up. So this is a potential exit, meaning I'm going to take some of the profit and then I could possibly buy at a lower price. Okay, because that's what happened here. If you would have already been in, let's say back here in February of 2023, you would have made substantial profit. And then you could have sold when you saw that there's this big old bearish engulfing candle. So you could have sold, I'm just giving y'all an example. So let's say you bought back here in February of 2023, and then you sold at the bottom of this bearish engulfing candle. That's still a 20% gain. 20% gain. So you sold some shares, not all, but you sold some shares at a 20% profit, right? Over pretty much a 6-month period. So again, I'm not here to tell y'all what to do. I'm just showing you what I do. Okay. So I'm looking at this like, man, okay, that's pretty good. 20% profit over a 6-month period. cool. Then you could still come back in and buy more because now you're paying attention to candlestick patterns. So now you can take part of that profit that you pulled and then buy some more. And now, bam, you're going to go back up. Okay. But at least you took some profit. So does that make sense? Let me know if this is making sense. So this is pretty much it. This is how you establish your exit points when it comes to trading and when it comes to investing. But remember, you still have to, with investing, you still have to utilize those other things, other characteristics of the market that tells you, yes, I'm definitely going to continue with Apple for now because they're releasing this, and this. Like Amazon. I'm going to show y'all something with Amazon. So Amazon recently announced that they're they've created a health insurance plan, which is what going to be $9 a month. Well, I'm gonna tell you something. This is what I'm doing. Okay, me personally. Whenever Amazon clears this previous 3-month high, I'm buying more shares. And here's why: because this is a resistance. I don't want to buy more shares right now when it hasn't cleared here, it hasn't closed above here, because it could potentially come back down to the previous month high. Because this orange is my month high, right? This is my month high. This is my month low. This is my 3-month high, and this is my 3-month low. So remember, I have my fib, all that good stuff. So all I'm doing is paying attention to, this is my pay attention, Leona. This is my pay attention area. So as an investor in Amazon, this is telling me if I should be paying attention to sell a few shares and then buy at a lower price, potentially, or if it clears above here and closes above here before the year ends, I should be considering buying more shares. So that means I want to have my money already in the broker that I have, and then boom, when it's time, I could just buy. But if it starts to sell, let's say I see a bearish candlestick pattern form, then I'm like, nah, let me sell a few shares depending on, again, the type of movement. But if it forms a bearish candlestick pattern and it confirms, yeah, you should be, that's your exit, because this is resistance. So hopefully this is making sense and you're like, oh, I get it now, Leona. Yeah, okay. I see what you're saying. Listen, at the end of the day, you're going to have to do this over and over and over again for you to really get it. And this is some of the stuff that I show in the 90-day trading bootcamp, because I want to make sure that people leverage the skill. Okay. This skill is not just for you to trade. Can you just trade? Absolutely you can. But I want you to think about something. Building generational wealth is about creating something that can be passed on forever and ever and ever. Passive income is going to give you that. Trading for the short term, if you do not trade, you don't make money. So this is why I'm teaching people in conjunction with learning the skill of trading so you can make short-term money when that time comes, because you've learned the skill, you've mastered the skill, you're having consistent profit in your demo, you're maintaining a certain win percentage, your risk-reward ratio is great, yada, yada. All of these factors come together, everything is good, you're ready to go live. Now, when you go live, again, you have to trade to make money, unless you're using and leveraging AI. But then I want you to think about this. There's nothing wrong with leveraging AI, but it's definitely something wrong when you don't learn the skill for yourself. Because what if when you learn the skill for yourself, you can create your own type of system that does the work for you according to the strategy you're using. And now you don't have to worry about someone else's system or platform going down or malfunctioning and then blowing all your money, like some people have experienced this year, right? So instead of that, now you can create your own, but you also know how to do it yourself. That's what makes you lethal, because not only can you create the system, but you also know how to do it yourself. So when you're leveraging that system, boom, I know why it's showing me that I should enter the trade right now, because I know how to read the charts myself. Okay, so that's number one. If you don't trade, you don't make money. unless you're leveraging AI. But like I said, you need to know how to do these things yourself, as well as leverage AI. Okay. Then the other piece is to build generational wealth. You want to create passive income, y'all. This is where your money is multiplying while you're asleep. So I want you to just imagine this. When the time comes, whenever that is, I'm going to say this, and some people may not agree with me, but oh well. Don't let anyone rush you to put your money into a live broker account. I don't care who it is. Don't let them rush you, because your confidence has to be there. Your understanding of the market has to be there. You have to be in that position where you're not emotionally attached to trading in any way, shape, or form. Like, you have less emotional attachment. You got to have all of that stuff before you go live. Because if you don't have all your ducks in a row when you go live, you're going to blow your account, which means you're going to lose the money that you put in there. You don't want that, y'all. You want to continue to grow. So when you invest and you're leveraging these skills, now you're going to create a way for you to generate passive income. You can take the profit when that time comes and put it into the stock market. You can take that profit and put it into buying gold, buying silver. Remember, that's a tradable thing. You can also invest in it. So now that you're trading and making money off of gold and silver, you can also invest, and then that's long-term passive income, right? Same thing with, oil. If you're a person that's investing in oil or considering investing in oil, if you're considering investing into different pharmaceutical companies, right? These companies are on the New York Stock Exchange and whatnot. You can look at that on TradingView, and you can leverage the skill of trading to help you to find better entry prices, and also when you're going to exit or at least take some profit. But this is a long-term play too. So you don't have to sit and look in front and look at the charts all day to consider when to invest. No, you have price points that tell you, let me pay attention here. Set your alert on TradingView. And then this way, now you can say, okay, I'm paying attention. Should I exit or take some profit right now? Or should I start buying right now because of what I know? So hopefully, if this helped you on tonight, whether you're watching this live or the replay, I need you to let me know what you got from it. What did you learn? What are you going to pay more attention to now when it comes to exiting the market, whether that's trading or investing or investing? What are you going to pay more attention to now? Okay. If there's anything at all you're going to apply, please drop it in the comments so that way other people can see it. All right. And if you're like, Leona, I really want to learn exactly what you're doing. Like, I want to learn these candlestick patterns. I want to learn how to do this top-down analysis that you speak of, because that's like a foreign language to me. I want to learn how to utilize this Fibonacci, because first of all, I don't know what it is, but it looks pretty easy to use. But I want to learn how to do it. Sign up for the 90-day day trading bootcamp. That link is in this video, so you'll be able to do that. And if you do it before 11:59 p.m. Eastern Standard Time tomorrow, which is November 27th, because it's Cyber Monday, you still get 50% off. There were people that were able to get 50 and 60% off. So come on, you can still get it. And if price has been a concern, again, I'm still offering it for now. I'm still offering people payment plans, because we should not allow money to stand in the way of us making more money. I want you to think about the amount of information I'm giving you for free. When you pay for it, you're going to make that back when you have learned to master the skill. You're going to make that back way more, you know what I'm saying, than what you paid for. You're going to make way more back. So that's how I looked at it, and that's how I still look at it. That's why I still pay for information for different things that I need help with. Right. So that's it. If you're like, Leona, this is for me, absolutely go ahead right now. Click the link that you see in the video. Like I said, it's 50% off right now. You can make sure that you don't have to put a code in, y'all. It's automatically there. It'll do it for you. So just put in whatever your method of payment is and get signed up. All right. We kick off January 3rd, 2024. It's 90 days. is no joke. We're going live twice a week, and there's 2 different times each week. So that way people who are international can get on, and then also U.S. residents have a time to get on, because I understand people work schedules and all that good stuff. Okay. And if you pay for, I think it's the advanced ticket, you'll get access to all the recordings. And if you pay for the elite, you get, of course, all the recordings, but you also get one-on-one sessions with me. Okay, so that's another thing. So that's all I got. I really appreciate every person that jumped on today. If you're watching the replay, then don't forget, join the Prosperity Calls community, so that way you can know when I'm going live versus waiting for the notification. Okay, you get the emails and all that good stuff. All right, so that's it. Y'all have a good one. I'll see y'all next time. Bye.